in exiting Bitcoin, Cole, the greatest risk becomes not owning Bitcoin. So I feel like there's more pressure in the bear market to make sure that that awareness is as keen as can be. Just as you know, like at this particular time, making sure not only were you positioned correctly, but friends and family and everyone else, and then getting them, you know, to the point where Bitcoin becomes overvalued and then actually taking profits. Once that happens, then that responsibility is almost flipped upside down. And now it actually becomes what happens if this is the moment that actually all models break to the upside. So all that resonates with you though, right? As far as the bear market and what we're going to be looking at and how the responsibility is.
Absolutely. It's, I was watching your video that you put out a couple of days ago about how to position if the bear market, if the cycle structure breaks, and thinking about that. And I love that you're thinking about that now, because now is the time to think through that whole chain of events and all the steps that we need to take along the way to ensure that everything goes the way we want it to go, the way that it best can go, to position ourselves that way. It's not easy for most people, I think, for most investors who aren't active managers of assets, to position and plan for the potential end of cycle, but then to think farther ahead than that is something very few people are doing, and it strikes me as critical, and so I loved seeing that.
So I loved in the Medium article, I loved that everything you worked out as far as we do see that fractal, the blow off top fractal, referred to, you know, initially as the 4-step, but the way that you were, this is why I love and enjoy working with people, because just one thought is able to trigger something else in someone else, and they're able to dive in and bring like precision and different perspective and insight. And the way that you presented that was really powerful. I don't know whether or not you're going to have the opportunity to talk about that today or not, but I loved it. I mean, really strong stuff.
Thank you.
Yeah.
Thank you. That means a lot coming from you, and I'm really excited to publish that maybe next week. Yeah. I have a few more rounds of tightening up of details, but that's going to drop soon. And what we're talking about, what we're referring to for everyone listening along, is a framework that I put together initially for myself and for my close friends and family who I'm helping manage along to take profit. And as I refined it, it struck me that this was something that could be systematized to a degree that I could share it out and offer up my internal thought process to everyone who's been following along with me since 2018. And all of those folks who I've just enjoyed interacting with so much on Twitter for years. We all have pieces. None of us have all of it. And I feel like I see enough pieces that have come together into a framework that is both robust and flexible. And there's just, it's just the moment I gotta put this together and publish it and offer it up to the whole community. And my gift to all my friends and family on crypto Twitter.
That's beautiful. I mean, so for everyone just, joining us now, just listening, me and Cole a few weeks ago got to record, and the presentation was absolutely phenomenal. I enjoyed the conversation ridiculously so much. And
me too.
I loved learning. I loved sharing. And some of the insights that you shared were uniquely, I've never seen anything like it. The way that you're using on-chain, not only to give us an idea of when it's signaling a potential top area, but actually using on-chain to exit the top. This is something that the Bitcoin community has not yet seen. I think it's very powerful, and it's just another tool that the more people that are aware of it, the more of an edge they're going to have. So I don't know if whether or not we're going to talk about that stuff again or not.
Absolutely.
I hope we do.
Absolutely.
And I know that we had also that might have been a once in a lifetime conversation. We have to talk about some really interesting stuff that regarding the macro and what that might look like going into the future, and we'll just see how it unravels. But I just have to say, Cole, I enjoyed meeting you and then getting to know you and being able to work alongside you now. So I'm grateful for it. And that's what's amazing about the Bitcoin community, right? I mean,
it's so true. It's so true. And I feel the same way. It was a fantastic conversation, and I look forward to more. What I should start out by doing is just introducing myself, giving a little bit background for folks who haven't seen my Twitter in the past, and then they'll have a little bit of context where I'm coming from. Started off in the 2000s, in the aughts, as they say, as an FX trader. I traded FX only for 7 years. Independent, later joined a fund. The fund blew up. It was definitely a strange time to be working my way through the learning curve in the global financial crisis. And then at the same time, all of that was happening, I had a parallel career the entire time as a Silicon Valley software designer. Read about Bitcoin in 2011, didn't understand it, read about it again in 2013. I remember looking at the chart in the middle of 2013 and seeing that crazy spike up to, what was it, like 250 or something, and thinking, man, I missed the boat. And isn't that like just the classic archetypal psychology? I'm so glad that happened so that I understand folks who were saying the same thing today. Later, Bitcoin broke all-time highs. I finally FOMO'd in, aped in, still didn't understand it, sucked it away in cold storage, forgot about it. Fast forward to summer of 2017, went down the rabbit hole, was instantly hooked. It's the most fascinating thing I've ever come across in my life to this day. 2018, that was when my real education began. That was the year that I started tweeting about crypto. And a lot has happened, of course, between then and now. These days, I don't take a lot of trades. I focus more on a lot of different areas in digital assets. Bitcoin is my first love, but I spend a lot of time focused on DeFi these days. I am certainly not a maximalist. I consult to a layer 1 protocol called Mina, a DeFi protocol. That's been a lot of fun. Obviously, folks at home already know I focus on on-chain analytics a lot, but I'm also just as much focused on order book alpha. It's more powerful on shorter time frames. Been working on an algo for 2 years, just started live testing recently. That's very exciting. That's actually the algo on screen right now. I was a price action trader for many years and didn't use indicators. And I still consider myself a price action trader first, everything else second. But now the resources that we have at our disposal, they're just cosmic light years ahead of what we had to work with back then. I love that. I would love to show you some of the stuff that I've been working on. You've seen it in the last time we chatted, and it's in the article that I'm gonna publish probably next week. But the folks at home haven't seen it yet, and I think this will be really interesting for them. So should we dig into that?
Oh, absolutely. So excited.
Sweet. The way I think about how I approach the coming weeks and months is the first question that I ask myself, the first step that I take is to ask the question, are we in a parabola, or are we seeing distribution? One of the two are almost certain to happen, I think. And so I will perpetually ask myself that until I have an answer, one or the other. The way that let's focus on the parabola for now, because that's more front and center and more interesting. The way I'll identify that is, it's really simple and straightforward. And I wanted to simplify it for other folks as much as possible, is just by using cycle oscillators like this one. This is just an example, one of many. And I won't rely on any one in particular, but I'll be looking for many of them, if not most of them, to enter into this red zone up here. When that happens, and I'll probably, like for this one, I'll probably set my target for parabolic conformation, maybe a little bit lower than the bottom of this red zone. But when that happens, when we have confirmation that we're inside of a parabola, that's my first step. And once that happens, then we get into the more interesting part of to dig into some of the newer and more innovative on-chain metrics. So this one right here is realized profits to value ratio.
Just a little context for everyone. What Cole is explaining, in our last conversation, we were talking about how this bull market phase is going to either end one of two ways. It's going to be in a parabolic blow off top, or it's going to be in some type of distribution that takes place probably over a longer time frame than you would see in a parabolic move. And now what Cole is doing is showing us, depending on which of those two he discerns or which of those two is happening, how he will be looking at different data to discern that and for the exit.
Yeah. So the first step is to ask that question, and that's how I'll answer it for a parabola, and I'll show you later how I'll answer it for distribution. But once it's answered and a parabola is confirmed, if it's confirmed, then I'll move on to this metric here. This is realized profits to value ratio. It measures the average profit taking of holders relative to their cost basis. Pretty simple and straightforward. This is a fairly new metric. It was created by ARK Invest and David Puel, who invented MVRV and Puel Multiple. I'll be using this as my kind of lead metric. And I do believe it's really important to never rely on any one single metric for something this important. And so I'll use a bunch of other metrics as confirmation in conjunction with this. And so I'll show you what I like so much about RPV ratio. So what I have right now, I've set to, this is, we're looking at the 1 hour time frame, and that's a 10-day moving median of RPV. I'm going to zoom in now on 2017 so you can see what it looked like at the point that the parabola was confirmed in 2017. if this metric had existed the way that I'm using it back in 2017, back in 2013, it would have sold the top within 5% of the top both times. And I'm going to show you how I calculate that and how I use that. So with a 10-day SMA, when a parabola is confirmed, I'm expecting that this metric is going to either be moving up or moving sideways. Maybe it's even moving down a little bit. What we're watching out for is any drop of more than 10%. And that is going to signal that's our top signal for this metric. And what you'll find is this drop off here was the first time since the parabola was confirmed that happened. And that's right here around 19.5, December of 2017. Let's go have a look at 2013 real quick.
Love it.
Same story. Okay. So this is the point where the parabola confirms. And here it's up only or sideways. And then the first moment when it's down, let's see, 24, yeah. So that's about 1,080 something, real close to the top, real close. I'll be using this in conjunction with a bunch of other confirming metrics. Like I was saying earlier, there's a lot of other metrics on Glassnode that work similarly.
Before we go on.
Oh yeah, go ahead.
Before we go on, I mean, what's being displayed here is definitely unique to the space. On-chain is normally looking to distinguish when we're in that particular area where things are lined up, that we are potentially at a cycle peak, but not used to exit with this type of precision. So this is really beautiful stuff being shared here.
An example here. So this is NVT signal. Okay. And this is an older metric that I believe Willy Woo created. Mm-hmm. And we have the same settings here. I have the 10-day moving median on that. Here's the moment that the parabola confirmed in 2017. And this is even smoother than RPV. And your first moment of seeing a lower low occurs right there at the top. We're talking 18.9, 19,000. And similarly, looking at 2013, same story. There's the parabolic confirmation. You got the smooth ride up. And as soon as you start seeing lower prints, you're within a day of the top. And we could go through the same exercise with realized HODL ratio. And these are useful as a sanity check. I don't ever want to catch myself wholly focused on one metric, but then there are these other metrics that Glassnode offers that take a totally different approach. This is something that I didn't get a chance to show you in our last call, but I want to show you this. This is so cool. This is spent volume with a lifespan of 7 to 10 years. What that means is coins that haven't moved in a minimum of 7 years. And I've got a 7-day SMA applied to it. That's it. And what we see is anytime these coins move in any sort of volume that's higher than about 1,000 coins per day is a major local top or the previous cycle top. This is the essence of the most highly distilled on-chain alpha. This is another metric that Glassnode just shipped a few months ago. And when we think about the smartest of smart money, by definition, we're talking about folks who are still holding coins that they held 7+ years ago, that they haven't moved that entire time. Everyone who held coins back then has either sold them or lost them in Mt. Gox. And what remains defines the individual holder as smart money beyond any possible point of disagreement. And when they move those coins, we can see that every major local top, if we look back on even the minor local tops, remember this one? Remember this one?
Well, I mean, that shows how smart that money is over there, because you're looking at, there was no reason what was happening within Bitcoin cycle that smart money would be moving money other than what was taking place in the financial markets in late February, early March. And that's what's exactly what they picked up on over there when they when they moved those coins and sold them in where you have highlighted in the early March, right in that area over there. And that shows how smart that money is.
It's telling. And what's even more telling is the knowing what was coming in the financial world and then comparing that to their awareness of what was coming in this Bitcoin cycle. They held steady and took some profits on some of those ancient coins from long ago, but waited until these local tops to take the majority of their profits.
Is there any way to know if those same wallets are then accumulating? For example, the ones that took profit between January and April, after the correction down towards 30,000, are they the same wallet? Did they start accumulating again? Because we see that behavior in larger wallets.
We do.
Older wallets, though.
And I love that question. And I would say it is knowable, and Glassnode knows it. The data is proprietary for them. And I have a really good relationship with their CTO, but he would never share that kind of data with me. And I would love to be on the inside there to see them digging into questions like that, because they're thinking about that too. But there are other platforms where you can do that sort of stuff. So this is another metric that I'll be watching closely. What I also love about this one is that you can just set alerts on it. You just create an alert and set it and forget it. And
I ask you that. What is it, over 1,000 that you'll set the alert for yourself?
Exactly. Yeah.
We'll be following you on Twitter, hopefully to get some insight when that's occurring.
For sure. And this is a T2 metric also. This is the available with the $40 a month package. All of the metrics that I've shown you are available with the $40 a month package. So this is some of the stuff that I'll be looking at for Bitcoin. Let me show you what I'm going to be looking at for Ethereum. So active addresses is it's a really interesting metric to me. It's simply the number of addresses that are sending or receiving on any given day. And I've studied how active address behavior interacts with price for a while on Bitcoin network, on Ethereum network, with altcoins. And I saw patterns that convinced me that if we could view this metric through just the right lens, it could be harnessed as a powerful leading indicator of price. But finding just that right lens was a challenge that I wasn't able to crack at the time. Glassnode hadn't cracked it either. And more recently, Glassnode integrated with TradingView, which let me experiment with applying classical technical analysis indicators to on-chain metrics, which is just so cool. It just blows my mind that you can do TA on fundamental data and it works. It doesn't always work with everything, but it does work with a lot of things. And I'll show you an example. We were talking about that lens that I was looking for. It turned out to be the most unexpected indicator, Ichimoku. So this is Ethereum, active addresses with Ichimoku applied to it and these are the settings that I'm using. And what I discovered is I'm going to zoom in this. Let's zoom in on DeFi Summer, which is right here. And if you're watching active addresses, this you'll see. Let's hang on a second. Let me make this a little bit easier for the folks at home to see. We'll just thicken that out. Here, let's make it nice and thick so everything's obvious. So focus in on this white line, the bottom line here. That's the support for this green area. And what you'll find is if this white line is able to make 3 or more higher highs, stair steps up, without being interrupted,
Penetrated to the downside.
Penetrated to the downside by this upper line, the thinner white line, then you have a strong uptrend. And what I found is that over and over at major local tops or 2017, the cycle top is the penetration to the downside happens right around that topping area consistently. So this is DeFi Summer.
What are we looking at the bottom? Is it that's not price? What is that?
This is price, yeah. This is.
I was looking at the first left column, and I was saying that's active addresses. To the right, the far right is the actual price. Is that correct?
Correct. Yeah. This. I wish I could.
No, that's okay. As long as we know what it is, it's perfect.
Yeah. Yeah. So and just to clarify, in case there's any confusion for folks watching at home, this is Ichimoku applied to active addresses, not applied to price. So let's go back in time to the previous major top.
About a 50% correction. Is that correct? Price went from roughly, let's say, $400 down to down to more than 50%. I was talking about the first one. I'm sorry, Cole.
You mean here?
Yeah. Price went from roughly $400, right?
Down to 320.
It's about a 25% correction.
Yeah.
Okay.
Yeah. That's definitely significant.
Significant. Yeah.
And so this was the plus token era. Same scenario where you had the run up. If folks who are watching at home were active trading during the plus token era, when in the depths of the bear market, if you all remember April of May 2019, that run up, this came not exactly did it call the top, but pretty close. It would have gotten you a really good exit. And here's 2017, Ethereum topping in January of 18. And this would have gotten you out a handful of days after the top. And I'm interested in metrics that get you as close as possible. Yeah. This was not as fine-tuned as I would have liked back then. But what I found, looking at each successive instance of this, this active address capitulation event, as I'm calling it, is they got more and more precise as time went on. And the most precise example of this was here. And unfortunately, so Jordan will remember the last time I showed him this a few weeks ago, you had a spike that looked just like this, and it was right here. And it actually, it nailed the April-May top within about $100 of the top. And for some reason, I don't know why, the data has changed. And I'm working with Raphael, the CTO of Glassnode, to figure out what happened on their end such that we no longer see this here. And, but he too can confirm that this was there. And we'll see, we'll find out. It's not a huge concern, but what I want to, the point that I want to make is that with each successive local top, major top, this signal has only gotten more effective, more refined. And the article that I'm publishing has a screenshot where you can see this piercing to the downside in May of this year. And my hypothesis is that as more adoption has come to the Ethereum ecosystem, as more holders of the token are out there, as staking for Ethereum 2.0 has become more and more common, this signal has only gotten more on point.
More sharper, absolutely. Yeah. So even with this current data, and I do remember when you first showed it to me weeks ago, and the discrepancy I'm sure will be fixed by Raphael and the team. But even when it pierces over here, I know that you articulated that you're looking for almost perfection. It still gives you a very good exit signal,
And if perfection is not achievable, if these signals, for whatever reason, don't play out, that's okay. If we're confused, if we don't see the signals that we're looking for, that's okay. I have a plan B that I trust as much confidence as I have in these metrics. I have even more confidence in my plan B than I do in my plan A. And I articulate the plan B in the article that I'll be dropping probably next week in great detail, and everyone who's listening will have full access to how to go about executing on both of those. So, so if this doesn't work out, it's all good. We'll get out with a really strong exit. Well, this community doesn't even need this stuff, but for everyone else who's out there, whether this stuff that I've shown you works or not will have an exit that's quality.
Well, it's very humble of you, but obviously, this community, which you're an extension of, in many ways, is iron sharpens iron, and by us working together and all continually improving and upping our knowledge and our abilities and our game, we then collectively all perform at a higher level. So that we're very, very honored, and it's with great joy that we're listening to everything that you're presenting, and it's going to be able to help all of us, improve our skill set. So we're grateful for you.
Nice. Thank you for that. And so then there's another dimension of this that I want to speak to also, that that I think could be important when we if we don't want to exclusively use on-chain analytics to without looking at everything else, if we don't want to exclusively use technical analysis, order book data is so powerful. And I'll show you another thing that I'll be looking for. This is Trading Light. Trading Light is an order book heat map platform that overlays the bid and ask, the resting orders on the book for each major exchange over price. So you get this cool matrixy effect that that in certain points, especially key turning points in the market, is some of the most potent alpha that I've found personally. So I'll give you an example, and the most important example. We're looking at Bitfinex order book for BTC USD. And you can see the yellow box. That's surrounding this block of orders that has been in place since price was down at 40,000. And you'll notice it has not moved. And you'll also notice that
one thing I'm confused about before you go on, how are those orders still on the chart on the left? Like when we're looking at past behavior of the chart, whether you look at, like, for example, the April top, and you see those are not orders resting in the market any longer. How is it still showing an imprint of the orders? And how do you know which are current orders, and how do you know which are past?
Yeah, so what the platform does is allows you to take the current set of orders on the book, mm-hmm. and extend it for 20 candles or 50 candles, whatever you like. Mm-hmm. All that does is make it easier to see. And so when we look at whatever is here right now, mm-hmm. that's what's current on the book right now. And so what Bitfinex allows you to do, and every exchange handles this a little bit differently, but Bitfinex will let you see for maybe $10,000, $20,000 above price, $10,000, $20,000 below price at any given time. And you can see resting orders on the book right now. And so if we look all the way back to this time period, these orders are no longer relevant. They're no longer here. Now, this area we couldn't see at the time because at the time price was down here, and so our visibility did not extend up here. Now our visibility extends to maybe about up here, and down to here is where it stops. But all the current resting orders are visible through this platform. Does that all make sense? Does that answer your question?
Yeah, so we're looking at right here on the right, those uniform lines at the top, which are open resting orders, right? They go from like October to here right now in the first week of November. Is that correct? Those are all open resting orders. They're white up top. And those are live orders showing the current order book of the market. Now, the ones in the past, when we look to the left of the chart beyond October, those are where past orders were at that time.
Exactly. And the thing to get about this, what's important to focus on is the darker areas, the areas in between support and resistance, you can see for any given level. So this is 71,100. Right now there's 0.2 Bitcoin for sale. 70, 71, 70, 71, 90, 71, 200, etc. You get the picture. There's very little resistance up top, and then every, let's see, what is this? Essentially every $500, there's 100 Bitcoin sitting there waiting to get sold, and that's it. Now, big picture, what's normal, quote unquote normal, is these kind of dark areas where there's just not a lot of resting orders on the book. What's most important to take notice of, in my opinion, is this area down here where orders are so densely packed. Let's zoom in there so that we can look and see every, what is this? So this is 38,000. And we go up $50, $50, $50. There's
giant floor.
This is an impenetrable floor that is the bull market floor. It will not be breached. And these orders will not be lifted.
When did you first start seeing those appear? Was it during that particular correction into late September, or was it after early October, rising out of it, that those orders appeared in that area?
These orders appeared right here on September 20th, the first time price touched down to the 40,000 level after coming off this local top. And notice also how they appeared out of nothing, which tells us that one entity is responsible for them. And I made a bold statement about a minute ago that these orders will not get lifted.
Okay.
And I feel confident in saying that because I've observed this pattern of behavior over and over on Bitfinex through this whole bull market, dating back even pre-bull market. The data on this platform goes back to 2019. Oh, I wish it went back further. But as far back as it goes, you can see this one entity.
If you were the Bitfinex whale, why would you be placing that level of orders there right now? Most likely that never gets filled. I'm pretty sure that they understand. Is it just in case of an anomaly event that they've picked a point where, like, if for whatever reason something happened to cause some type of price spike, they're happy to take that liquidity right there? Or is there another reason why they would be stacking orders that most likely will not get filled in that particular place?
Well, I think at the time they wanted to ensure that price went no lower, and they're ensuring that that exactly as you said, in the case of an anomaly, if if some major fundamental macro event were to unfold, they want to make sure that, number one, this bull market is not breached to the downside price-wise. Number two, that if a spike down were to happen, that they're the buyer, they're getting those discount coins. And perhaps number three, there's a statement being made. You shall not pass. Now, all of this is speculation on my part. I cannot know what this entity is thinking, but I can observe the behavior of this one market, of this one pair on this one exchange, where these order blocks that look just like this, that very few people, very few entities could afford to place. And even when, and they're placing them both below price and sometimes above price to keep it from running away when they're reaccumulating. Also interesting to me is that this, when you run the numbers, the volume of coin that it takes to lay a wall like that is it's more than 99.9% of entities who hold Bitcoin have available to them, and they don't even need to lift it when price runs away. What does that tell you?
Right.
So whoever this is, they've been owning the Bitcoin market from the COVID crash to here. And if you have Trading Light, it's an inexpensive platform. I recommend it. I think the subscription's like $15 a month. If you have Trading Light, go to Bitfinex, BTC USD, and look at the history of the pattern of these order blocks, and you'll understand how significant they are. They've been on the right side of every move, every time we've seen them show up, dating all the way back to late 2019, even before the COVID crash. Anyway, explaining all this, circling back to the point that I originally wanted to make, is I will be looking for order blocks that look like this at the top.
Will those markets be placed do you believe towards the peak? If we're entering a blow off top, do you expect to see some large orders placed up there?
I suspect we'll see them, but if I don't see them, I'm not going to take that as an implicit, this is not the top. That's not going to be my approach.
And this entity also is taking small profits along the whole way up as well. So they have a different, let's call it, strategy than maybe a lot of other market participants.
Where I do expect to much more likely see Bitfinex Whale show up is in my plan B, and without laying out that whole side of the conversation, the short version TLDR is it's the lower high that follows the breach of the parabola.
Absolutely. Yep.
And at that point, I do expect to see, and I will bet anyone who wants to bet me, I expect to see Bitfinex Whale show up there. I could be wrong. We'll find out, but I'm willing to put money on that. So, yeah, order book heat maps, they're an incredible tool. that I've gotten a lot of value out of, and I think they will only become more valuable as time passes.
On a side note, I think I saw a tweet this past few days from William Clemente saying that he's taking a lot of interest right now also in order book and the flows and spending a lot of time understanding them. Did you pick up on that or no?
I didn't see that tweet, but you know, this is something that I love so much about crypto is some 19-year-old kid somewhere off in some university just gets involved and starts tweeting, and people take him seriously. People take him under their wing. People listen to what he has to say simply out of merit, not out of
I don't understand where some of the
only.
wisdom comes from, because the stuff that's taken me 20 years to understand, psychologically, the market participants, how at 19 with no market experience, it's possible to have it. So that's the part I most appreciate about him.
Yeah, I smile every time I see that, just for that reason.
Yeah.
So this is all this is how I'll be approaching the top, if we top here in the coming months, if we see a parabola unfold, but we might not. We may wind up with distribution.
Mm-hmm.
That is a possibility, and it's so important not to get caught in one mental model, to have flexible mental models for all the different scenarios that could present themselves. The framework that I put together starts off, you'll recall how the first thing, step one for me is, are we seeing a parabola unfold? Are we seeing distribution happening in the marketplace? And I showed you how I identify a parabola. Let me show you how I identify distribution. And I really like metrics that are simple.
Mm-hmm.
And this is an indicator that I created. I haven't published this yet, but I will publish it. I'm going to publish it for free. Anybody can use it. It's mainly used for measuring the seasonality of an asset. And in the development of this indicator, my mind has been blown observing the seasonality of just about every asset I look at in any asset class. It does not matter. There are seasonal cycles baked in. This has been so educational for me. It's just a fundamental dynamic of the market that I've learned about in the past bunch of months that is, I think, criminally under-focused on by most market participants, as seasonal cycles for Bitcoin, for digital assets. The cycle is typically about 60 days, give or take. For traditional assets, in other asset classes, 90 days plus, give or take. And I'll be talking a lot more about this later on, especially if we're in a bull market by next year. I'm not even going to bother to get into this in this bull market, but little side effect that I discovered, a side benefit of this indicator is that it shows really clear visual representation of distribution happening in real time. And so what we see here is on this second confirmed lower high,
right?
3 points in a row, that's a signal that distribution is in progress. When this oscillator flips bare with its second cycle below the previous cycle, that tells us that macro distribution is happening, and that would have gotten you, that would have given you so much time to position yourself to exit here. I wish I had had this indicator back up here. That would have been nice. And, but
could you explain to us the differences of what's happening right now, where we're looking at now 3 peaks with the downward slopes, and the one starting in July and then into September and now in November? Is it because price back in the spring was rising, why that was occurring? You know, if we were to go ahead right now and put another trend line, the slope is not as steep, but the slope is, instead of like this, it's a little more leveled out. But we also have 3 peaks now, making lower highs. Yeah. And how do we distinguish that, whether distribution is or isn't taking place right now?
Great question. So the first thing that I would direct your attention to is you want to see when a sign of healthy cycles, when they start down in this green area and they make it all the way up to this red area. So this is a healthy cycle. These are healthy cycles. Mm-hmm. Mm-hmm. And this has come down. Now, we didn't make it all the way up to the top, but we made it very close. Mm-hmm. And I am not concerned yet that this is an unhealthy cycle unfolding. But if this cycle completes and then it comes back up for its next cycle and it's unable to break this trend line, mm-hmm. I will get concerned. Oh. Because that will be a sign of distribution in progress. I do not expect to see that, but if we do see that, that's our signal. Now we're nowhere near that.
Right. And also, is this correct, Cole? If I'm looking at starting where you started that trend line in July, if you just put your mouse over it, now the second peak or the second touch, that kind of stayed, let's call it towards the top. It didn't, there was no, you could see back in the previous distribution that price actually came below that zero reading. So does that maybe not count as a second touch yet because it didn't reset?
I count this as one cycle, so not as 2.
Got it.
Yeah. Yeah. So this oftentimes, whether it's a healthy cycle or a distributive cycle, sometimes you'll get 2 touches. That's not a concern. Mm-hmm. The concern is 2 consecutive cycles with lower highs. Mm-hmm. And yeah, another example of that.
And I wonder if those lower lows at the same time the lower highs were being put in is also of significance, because we had 3 lower highs, and then we also have the 3 lower lows.
That's a good point. So I will be watching this carefully, and this indicator will also enable folks to set alerts so you can, you'll know in advance. And so this will give us plenty of time to identify distribution in progress if that's where things come to. And realistically, there's plenty of other good metrics out there, especially on chain, that give us confirmation of this trading view indicator.
Love it.
And so here's a question that I have for you that is something that I've been thinking about lately. Is once let's say hypothetically we get our parabola, we take profit. What will I take profit into?
One of my favorite things to consider. And so let's break it up into 3 different options. All right. And I personally, throughout each phase of each market, deploy multiple strategies. And within those strategies, diversify within those strategies. But we're just going to talk about 3 basic options that people might want to consider. The first would probably be the most basic. And if someone is exiting spot, they might prefer just to go into stablecoin or back into the traditional banking system, back into their bank account, and then just wait until Bitcoin moves from a point of being overvalued, either maybe more neutral and begin slowly dollar cost averaging back in, or wait till Bitcoin becomes undervalued again. And at that point, start front running the coming next phase, next bull market. So that would be the most basic strategy that someone might want to employ. The second would be it's very similar, and it might be for a lot of people to take a position actually in gold, and that might sound counter intuitive to a lot of people today, listening to the current narratives that gold is being replaced and slowly devalued and things like that. However, we do live in pretty precarious times. And if you look around and you see the dominant world players, you know that the US holds the most gold. You know that China and Russia have both been accumulating gold for the past several years, actually both of them de-dollarizing. And it is possible that at some point over the next year, you can't time these things, that these world powers sit down for a new Bretton Woods type agreement to kind of reset what the monetary system looks like moving forward. And whoever owns the most gold is going to get a seat at that table. And most likely, because of the distrust that's in the current system, the gold would play a role in that, whether or not it had to do with the weighting it has in the IMF's SDRs or what exactly that would look. I don't know, but there is a risk. There's a possibility that during the coming bear market, gold could be repriced to the upside and quite significantly. Now, is that a bet that someone would make? No, but owning gold versus the US dollar, that's a tough decision to make. Probably the dollar is what's dominant during 2022, especially if we move towards an environment where the inflation is causing the central banks to actually move quicker towards some type of tightening. You might actually see something similar to we saw in late 2019, early 2020, where we saw like the dollar milkshake theory playing out, where there's a low supply of dollars, there's a huge demand for dollars. And in that type of environment, the dollar might actually outperform. But you could also make the case of why you'd want to hold gold, whether it was something like digital gold, like Pax Gold, or actually physical gold in a vault overseas. And there's many different options for that. And then the third option is probably the best option, but also the most advanced. And I think it's very important for people to know thyself, to know what they're capable of. A lot of people who don't have a lot of a market experience, they tend to go for what might have the greatest potential rather than what is best for them. And probably, actually taking short positions versus a lot of altcoins, alt versus US dollar, as many of them will lose 95% and above of their value. It's probably the best way to play that phase of the market. But again, it is also the most advanced, and it doesn't mean it's the best for you who's listening right now, but it might be the best for those who actually have that type of capability.
There's so much that you just said that I want to speak to. First of all, talking about gold, there is so much hating on gold in the crypto community, and I totally get it. It makes sense. I suspect that crypto native disinterest in gold will fundamentally change our relationship to that asset. But that's something we're talking about 10, 20, 30, 40 years from now. For the moment, it continues to be the treasury asset of choice for every central bank, and with central banks positioning amongst each other to grab the gold. Even just in the last year, we've watched bizarre news stories play out that would make no sense at all to the average non-active investor watching central banks jockeying over shipments of gold. It's bizarre. I look at this, if you look at the gold chart, it's just an endless series of parabolic market cycles that look just like Bitcoin happening in slow motion and at a pace every 10 to 20 years instead of the pace that we're used to in crypto. But I see a cup and handle that's burning to break out, and 2022 is when I suspect it does break out. I could be wrong. But then moving on to what you said about vaults, there's this parabolas are, sometimes we forget they're a reversal pattern. And the most, before we had the amazing tools at our disposal that we have now, the smartest, wisest way to play a parabola was to wait for it to break and to short that lower high. And I can't help but say it. I'm just salivating, waiting for those altcoins with no use case.
Right.
And
great communities.
They're right, exactly. That's going to be fun. And I'm going to be a little bit more careful than I would have been even just a week ago. I'm curious to hear your take on something that he mentioned that may be totally off base, but his hypothesis that hedge funds with basically
rebalance in the first quarter.
They come into Q1 with fresh, and they want to take on risk, and they're looking at the fastest moving horse. that they're just gonna buy up a whole bunch of crypto,
yeah,
and pump it through springtime.
I have two thoughts about that. The first thought is that originally Raul's thesis, and Raul does believe that towards the end of the year, there should be a big move up. He's looking for that to occur. He's then looking for that to kind of be sold off, and then a next wave up into 2022 that's bigger than whatever happens towards the end of the year. Originally, this thesis was because of the upgrade to ETH 2.0, that was going to be basically something that carried the market up until the upgrade, which would be a sell the news type of event. And it made a lot of sense to me, and I needed to be watching what was happening with greater precaution because of that. And then when that event was sidelined and moved out into the summer, the thesis stayed the same, except the new variable was, well, hedge funds are going to be coming in and buying. And again, yeah, you do have to follow those with a history of being correct. He was correct in talking about expect a 50% drawdown during the bull market. He wasn't at any point saying, oh, this is the bear market when we were seeing the mid-cycle correction. He was saying it's just a pause, and this is going to continue. And he's on the right side of the trade now. And so it's something that we need to watch for. You mentioned the video where I discussed the psychological aspect of the different market participants in that turn into the bear market. And so it's after that first dump that we need to watch the repair out of it to see whether or not that's going to actually be different this time. And then we actually move up, or that's going to be sold and be that you know exactly where I'm talking about in the market.
Yep.
That's the place, by the way, to attack the alts, right there. As that resumes down, that's the place. So focus in and look in on that. But so I think that we need to be we want to have ideas of what we think is going to play out. It's hard when you have a long history of doing so well and getting it so right, that you get caught up into a place where you just think you are right. You don't ever want to do that. And you have to know where you're the most vulnerable. So the most vulnerable is going to be exiting the market. If we have a parabolic move, it's going to be exiting the market. The risk then becomes not owning Bitcoin. And if some type of different behavior does form, we want to be looking for it. But you did say just before, it's that parabolic move is normally a turn. And it is normally the top in the market. And likewise on the bottom, when you see a big dump, and like the washout you saw back in March 2020, that's also normally the bottom, right? That type of liquidity event. And this is just reversed upwards. So until that actually, if that occurs, until that actually structure broke differently, we look for the model to hold until it doesn't. And that gives us the earliest opportunity to know when it is different. But a lot of people the whole way are looking for things to be different. And that does not serve you well. Don't look for things to be different until they are. And you'll know as early as possible when this time is different, and then could go ahead and protect yourself and position accordingly.
I love it. This is great stuff. I am, this is my favorite aspect of the community, is that I'm constantly learning. All of us are constantly learning.
Absolutely.
I learned a whole bunch just in the last 15 minutes.
Every time I talk with you, I have that experience. So that's why I enjoy it. I get to sit down with someone with such strong market experience and talk markets. And, it's the best when you got a cup of coffee and get to do that and just go over charts together. And coming from that place of genuinely searching to know and understand more in order to improve themselves. And I like sharing that with you. I really do.
For sure. And it was watching your video the other day that we were talking about that made me think to myself, this is so important to me to be thinking 6 steps ahead. And I don't have enough bandwidth in my life right now to cover every scenario in my head.
Mhm.
And knowing that you're doing that is so important to me to have access to that. So I decided that I'm going to join your community.
We would love to have you. I mean, the greatest, by dedicating the time that we do every day, it gives us the ability over. We're students of the market, so we're just following what the market is showing us and looking to learn those lessons in that moment, which then adds up. But it's all these people who are kind of trained together how to view the market and think. Then, because everyone, I feel like I'm in awe of the talent I'm surrounded by, right? Yourself included. And it's like this hive mind, instead of competing against each other, working together. It's just a dream. It really is.
It has been such a pleasure to get to talk to you a second time and go through this all with you and learn more.
Well, thanks for sharing your time, for sharing your talent, for really sharing so much alpha with everyone today. Obviously, everyone knows, and I know people throughout this video have already been clicking on your Twitter to follow you there. If the Medium article has not been released, it will be shortly after found on this, and we'll get that out to the community as well. We'll make sure that that's linked whenever that comes out, and that it's I'll make sure to retweet that and get that out to everyone, because we look forward. I've already had a peek out of it, and it's absolutely exceptional. So I want everyone else to see it as well. So thank you, my friend. Really enjoyed the time and can't wait to our next conversation.
Awesome. Thank you. Grateful for all of your kind words. And I'm excited to join your community. And it's been a pleasure. And I look forward to more.
Awesome, Cole. Thank you.